Can I pay you by cash? Cash में pay कर सकता हूँ सर ಇದು ಕ್ಯಾಶಲ್ಲಿ ಪೇ ಮಾಡ್ಬೋದಾ? So I think one of the most common questions that business owners or business people have is whether they can make payments in cash or receive money in cash, because I think there is some kind of a notion that anything which comes in cash or goes out in cash cannot be tracked. Now in this video I'm going to be talking about the different instances or restrictions under different sections placed on cash and cash related transactions. Hi, I am Yashwan Nijgal, a chartered accountant in practice. Let me start off with scenarios where you are receiving cash and its related restrictions. The first restriction would be through something called as Section 269 ST of the Income Tax Act, wherein no person can receive an amount equal to or more than 2 lakh rupees in cash, either with respect to a single transaction or in a single day from a person, or by way of several transactions relating to a single event or an occasion. Now this would mean that if you are making a sale for more than 2 lakh rupees, you cannot receive more than 2 lakh rupees with respect to this particular transaction by way of cash. What will you do if you have already taken cash of more than 2 lakh rupees with respect to a particular transaction? The implication is very simple. You just have to pay an amount equivalent to the amount of cash that you have taken as penalty to the income tax department. So the second restriction would be through something called as Section 269 SS. So under the previous section, we spoke about a transaction which is in the nature of sale. Now under the second section, the restriction is with respect to monies received in the form of loans or deposits. Now the restriction is again similar to the previous section. However, the quantum of amount that you can receive in cash as loan or deposit from any party is significantly lower, and the amount is just 20,000 rupees. If you receive any loan or deposit from any person in the form of cash in excess of 20,000 rupees, you will again have to pay a penalty of the amount of cash you are receiving in excess of 20,000 as a penalty to the income tax department. Now let us understand the scenarios in which you will have to make payments in cash for either purchases or expenses. The first restriction would be through Section 40A3 of the Income Tax Act, wherein any expenditure that you incur in excess of rupees 10,000 per transaction would be disallowed. This would mean to say that if you are paying for an invoice for rupees 25,000 and the entire payment is made by way of cash, the entire amount will be disallowed. This would actually imply that you will have to pay taxes on this 25,000 rupees, though you have shown it as an expense. So if you have a scenario where you need to make cash payments, just make sure that you don't cross this threshold of 10,000 rupees and plan your petty cash expenses properly. So the second restriction with respect to cash payments is under Section 43, which has been introduced relatively recently, wherein any purchases that you make which is in the nature of fixed assets, for example, you buy a computer for 1.5 lakh rupees by way of cash, you will not obviously be expending it because it will form part of your fixed assets. This is to say that if you are buying any capital item or any fixed asset by way of cash in excess of rupees 10,000, then for the purpose of calculating depreciation, this amount of cash expenditure cannot be considered. The last restriction I would be talking about is under Section 269T, wherein you cannot make repayment of loan or deposit in the form of cash in excess of rupees 20,000, and if you have actually made the repayment of loan or deposit in cash and if it is in excess of 20,000 rupees, then the implication would be that you will have to pay an amount equivalent to such repayment in the form of penalty. A lot of us are under the misconception that if we take money for sales made in the form of cash, we save a lot on tax liability. However, most of us, because of the restrictions placed in the Income Tax Act, cannot utilize this cash received towards the expenses that we incur. So I would recommend that for all the sales made, the money be received through proper banking channels so that this money can again be used towards the expenses and you can claim complete deduction, and of course you will be less prone to scrutiny assessment, and overall tax liability would remain the same.